at BlackRock, if you look at Fidelity, like if you look at, let's take Bank of America, pretty big bank. The joke I used to tell is when I decided to buy Bitcoin in 2020, I told my broker at Merrill Lynch, which is a division of Bank of America, I said, I think I want to buy Bitcoin. Can you sell it to me? And he said, I can't even talk about it. I get fired. Okay, and I said, okay, you sure? He said, we don't cover it. I can't talk about it. We're afraid of it. I said, okay, well, I want to wire $175 million somewhere else. So I wired the money, and I bought the Bitcoin, and I still have the Bitcoin.
While everybody is worried what the Fed's going to do and how they're going to get out of it, all the other three major central banks had to intervene in their markets to quote unquote save them the last week of September. And they did, they did save them. And that kind of pulled us back from the precipice. And so I'm of the belief that, while it's certainly important what the Fed does, it's equally important what these other central banks do. And quite honestly, I just don't think they have the talent to pull this off. And that's partly why I think that we're headed towards this, currency crisis and this sovereign debt crisis. Central banks are very powerful, and I do think the people that run them are smart people. I don't think they're idiots, but I think they're arrogant, and I don't think that they have the skills to pull off what they think they can pull off. And so that's why I think we're kind of headed towards more volatility and more crisis. We are in the heart of Triffin's dilemma. If an individual country's currency is also used for the global reserve currency, there will come a point at which the needs of the domestic country come into conflict with the needs of the international community. I really feel like we're at this key point in history where all the cards are on the table, and this is the really big game, and this is kind of the game for all the marbles, right? And so I think there's a combination of domestic economic policy and global geopolitical policy that is kind of all wrapped around the dollar right now. And so I think that's kind of what we see start to play out in 2022, and I think that will continue to play out in the years ahead. 2022 was the story of the dollar, right?
A lot of legitimate leaders in the United States have said this is going to be banned. They would either say it's going to be banned because it's a Ponzi, they were the deniers, or they said this is going to be banned. Jamie Dimon said it's just too good to be true, so it'll be banned. So there were the people that didn't understand it, and there were the people that understood it but thought it was too good, and so the government would take it away. And then when the China crackdown took place, everybody said, we see China banned it, and so that proves that it's probably going to get taken away. And here we are in 2022, and what you have is a fight between the chair of the SEC and the chair of the CFTC to see who gets to regulate it or who gets to endorse it.
Post-crisis quantitative easing, this doctrine of abundant reserves, what they've decided to do is, well, we brought the federal funds rate down to the nominal zero lower bound, which means we can't do any more rate cuts. So what do we got to do? Well, we do what the Japanese did, even though we know the Japanese didn't have any effect with QE. So they just create a bunch of bank reserves, hoping that has, again, an external influence on the internal inner workings of the monetary system, which has proven to be ineffective. Yes, asset prices have gone up, but that's not because of money printing. That's not because of the Fed directly injecting these reserves into the system. Instead, we've had a monetary breakdown that has been proven to be durable and even permanent. The 2008 crisis was not a one-off event.
There are certain things that it is essential for government to do. I'm not an anarchist. I believe in a government, but a limited government. And the government should be limited, in my opinion, to very simple functions. Number one, to defending the country against foreign enemies. I have tried for a long time to see how to make national defense a private enterprise, and I have never succeeded. It's easy to see how to privatize schooling, but I don't know how to privatize national defense. So I'm reconciled to the fact that we're going to have to pay twice as much as we should have to pay in order to get an effective national defense. Because anything government does, on the average, there's some things that are more, some less. On the average, anything government does costs twice as much as if it were being done by private enterprise.
When we think of Bitcoin, we often think of it in a developed market perspective. We think of it as a United States person, we think of it as a European, for example, and people are like, why do you need Bitcoin? What is Bitcoin useful for? Whereas when you go to Argentina or Nigeria or dozens of other countries in the world, it's far more obvious why people need Bitcoin and why they might be interested in it, and why they might be interested in things like stable coins or things like ways to get US dollars, basically various types of harder money than whatever their local money is. And when the dollar gets super strong like it is now, the Fed is increasing interest rates, they're doing quantitative tightening, and they're trying to rein in inflation. And the problem is that there are so many countries in the world that buy commodities in dollars. And then they also, a lot of them have dollar financing. Another country can dictate your monetary policy for you. That's kind of the world we live in. And what Bitcoin comes around and does and says, here's an alternative.
That could be different this time.
So I think it comes down to like time frame expectations. And so if you look past over the past 40 years, if anyone has seen like an interest rate chart, for example, you start out at a very high level after the 70s, and you have 40 years of lower lows and lower highs of interest rates. And that's allowed for higher and higher asset prices, whether it's real estate, whether it's equities, just higher and higher. And my thesis for the past couple of years is that we are entering a structural change where once interest rates get all the way to zero or negative in some countries, that there's really not much further to go, and debt is already super high, and so we're going to start entering this regime of sideways to higher interest rates, which means generally lower average valuations, and generally just a lot more like turbulence in macro markets. It's not that constant, like, 40-year bull market. All the countries in the world, and especially the periphery countries, are tied into the dollar system, and so they're at the whims of the Fed. They can loosen dollars, and that usually what happens is these countries go out and they take on a lot more dollar-denominated debt, but then that comes back to bite them when the Fed can then arbitrarily at any time increase interest rates, strengthen the dollar, and it's like all of your liabilities are being hardened. And so what Bitcoin comes around and does and says, here's an alternative, and here's something that's worth exploring.
You've said to me the importance that you think it is that this is a grassroots movement. Share some of your thoughts on that and why you think it's so profound.
Bottom-up community in El Salvador, and it's a small, circular Bitcoin economy.
The Federal Reserve System was established in 1914 for the purpose of preventing things like the Great Depression. And yet, its existence was responsible, in my opinion, for the depth of the Depression. If a private organization makes a mistake, does things badly, it will lose money and it will have to go out of business. If a public organization does things badly and governmental organization does things badly and makes bad mistakes, it will be expanded. It will be expanded because they'll say, well, it's all because we just didn't have enough resources to it.